Here's a wave you can bank on. Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of November 12th, 2018. I'm recording this on a Sunday afternoon, the 11th, and so of course we're through the midterm elections, and you know whether you were looking for a blue wave or red wave or whatever, it's a pretty a done deal. And there's a lot of talking heads who say that the markets actually prefer a bit of gridlock in that nothing surprising or dramatic or revolutionary is going to get done. I don't know if that's the best thing for the country, but that's not what we're here to comment on. We're here to talk about the markets. But again, the idea of blue waves, red waves, all that's behind us with the midterms elections being done. Things for the most part decided with just a few out races that don't look like they're going to change the balance of power in any way. So what we have in front of us is the S&P 500, and there's a really interesting wave, Elliott Wave, very simple version of Elliott Wave in front of us here that I think gives us a very high probability of what we can expect next. So of course we've been in a bull market for we're in our 9th year now. And no surprise to anybody following along that October had a pretty sharp pull back. We've seen a retracement to that, and this is a really interesting move. So as I've pointed out in last few updates, this was something new that hasn't happened in the entire bull market, and that we had enough momentum in the down move to actually break through this white line, the 200-day moving average. We're well below the Ichimoku cloud. We got negative momentum going on here. And I had said I think this could be and is probably the start of something bigger, a bigger down move. And now we're getting more and more evidence of that. And let me shift this to a 60-minute time frame, and I'll show you the Elliott wave count that I'm looking at here on this shorter time frame, again 60 minutes. And it doesn't get much clearer than this. One of the criticisms of Elliott Wave is people will look at a chart and they can't see a wave pattern, and the reason they can't is because it's not there. There's not a clear wave pattern on every single chart, but when we get them, they can be really, really powerful. And so what we have here, let me go ahead and get my pen out and I will mark it. So we've got an Elliott Wave 1, 2, and I'll label that 1, 2. Hope my drawing couldn't be legible there. We've got a very clear wave 3. This was the move through October, so this is wave 3. And we've got a really clear wave 4, and it moved in a classic ABC pattern, A, B, C. This is wave 4. And now, after wave 4, and we got some evidence now of the momentum turning, and what we are expecting to see now is a series of low, lower high, low, lower high, on into a wave 5, that goes even lower than this move down here. And we can project those. When we've got a nice clear wave pattern like this, we can project a target. So let me go ahead and do that. I'll use Fibonacci retracement first. So from 1, 2, I'm going to do a retracement from 2 down to 3. And you can see, and again, I'm looking at the S&P 500 cash. The Fibonacci retracement zone is these blue lines here. It's 38.2 to 61.8 Fibonacci retracement. It nailed it right in between these blue lines. Went over a little bit. It's perfect. It can go up as high as here and still be valid. And you can see, had the big move down, the red, a momentum shift up into 4. All the signs are there. Now we're looking for a follow through, a continuation of that original move down into a wave 5 target zone. We can mark a target using Fibonacci extension lines, and the target is here between 61.8 and 100% extension, which on the S&P cash is 2604 to 2474. And we've got, again, a nice move. We're breaking the 200 moving average on the 60-minute chart, and we're just about to have our momentum go negative. So if this continues, low, lower high, new low, and it looks like it's going to. So I think the high probability over the next week or two is for the S&P 500 to work its way down into this wave 5 target zone. And again, this could be a part again of a bigger move developing down on the S&P 500. So I thought I'd share that with you. That is a pretty interesting wave count, pretty clear showing up. I'll go back to the daily chart. And again, we've broken the 200-day. We're up here. We found some resistance at the Ichimoku cloud. It reversed, and I think we're going to get that continuation that I showed on the lower time frame, and it could be good. There could be a lot of profit to be made. Market going down is, you listen to the financial press, it's always market up, it's good, market down, bad. Market is what the market is, and it goes through cycles, and we can profit when it's going up, we can profit when it's going down, and the market going down is part of a healthy ongoing market cycle. It's not a bad thing, and so we'll be watching really closely. We're biased to the downside. We've got some good short trades going already, putting on some new ones early in the week, and we're having fun. So that's my take on the market. Over the next week or two, more lows to come, more than likely taking out this previous low here. No analysis technique is perfect. This is probability, not certainty, but that's what I'm banking on and looking for. If it doesn't happen, won't be a crisis either, because we use risk management, we control our loss, and on the short trades, if they don't make it, we'll lose a little bit. If they do make it, we're going to make a lot, and that math works, right? We have big winners, small losers, and that's kept us profitable over several years. That's it for this week. Welcome your comments, your feedback, your questions. Just go ahead and post them on the blog page here. All right, take care. Thanks.